Hello?
One sec.
Recording is on.
There we go.
Oh, wow.
What the-
That's a nice robotic voice. Okay, so let's move on. Anybody has any questions, just stop me right there and jump right in. So here's the national debt. I should have put the interest payments and the principal payments. That would have been interesting to see. But yeah, overall national debt versus GDP. So this is just debt in absolute numbers, something like 30 trillion, and this is debt as a percentage of GDP, so all-time high levels. Um, and when you're talking about debt, you're talking about interest plus principal. But I would have loved to see, like I said, the breakdown would be interesting. Try and find that for the next time. So, as an investor or as somebody who needs to park some money, any money somewhere, what do, in such a scenario where everything's looking like it's about to crash and like right now it's already kind of crashing. So, it's sort of in the first phase of the crash. It's probably going to crash further. Like a lot of people think Bitcoin's going down to single digits. Do you guys believe that?
well, I mean, Jeff Berwick did say it was going to zero, didn't he? At some point, he said they were all just going to make a run on it, but I just don't think that time's yet. Why would all these investment banks, presumably having, at least the owners of these banks having connections to Freemasonry and whatnot, spend all this time and energy to get clarity from government so they can get custody services of Bitcoin and whatnot if it's just going to go to zero soon? I mean, more than likely, it's almost like they crashed it to this level to get in at the cheaper prices so they could then offer it
Yeah.
to their clients. I mean, Louisiana government just passed something so now they can have a Bitcoin custody at investment banks for clients. So there's too much behind the scenes
Mm,
shenanigans about mass adoption to make me think like, oh yeah, this is the final one we screwed up. This is
mm,
it. Crypto's dead. I don't think a lot of the shitty ones will probably get weeded out, but I don't think
mm.
Bitcoin and Ethereum and a lot of them in the top, whatever. But I mean, anything can happen, right? I mean, look what happened to Luna. But the
I feel
premise of that
like
was faulty to begin with.
I feel like it could though possibly go into single digits. Like I don't know, maybe 10, 8, 9. I don't know. Who knows? But I hope it doesn't because it's already so bad. Like I don't know how much more pain I can take personally, but and everybody else. Everyone's suffering right now. So
Yep.
yeah, I don't know.
Personally, I don't think it's going to go that low. And if it does, it's going to be a capitulation. It's going to get bought in no time. Because if
Yeah.
I'm going to point to what Ripple Labs, there's a Ripple Labs put a report last year uh, prognosticating about what they expected the overall crypto adoption rate to be in about 18 months' time. It was written late 2021. And
Mm,
they forecast a 45% global crypto adoption rate by the end of Q1 2023, possibly higher. Lebanon's adoption rate and Turkey's adoption rate, especially in the Middle East and bordering across Eastern Europe, also
mm.
portends for even higher adoption as those countries basically have no money that can even be used to begin with. So, I mean, people are buying petrol with Monero in Lebanon right now.
Right. Lebanon is bad. Lebanon, Turkey. You're right. And I'm pretty sure Sri Lanka will follow suit pretty soon
Yeah,
because
yeah. Sri
their
Lanka
economies.
economy crashed. Actually, I saw the news a
Yeah.
few days ago.
Yeah.
So that's actually good because that means that there's something that can be dropped in a payment rail on a national scale, at least on the local business level, that can be used
Hmm.
as a drop-in replacement. So I think that someone needs to kind of go out there with like some sort of front-end swap out to say, hey, we're here to give you some ability to transact back and take it away from the governments who have to deal with this nonsense. I mean,
Hmm.
Lebanon's experience just seems like a template for the rest of the world, in my opinion.
Yeah, I see that. I agree with you. And I feel like we're not even taking the CBDC scenario into account yet. And imagine when that happens and when they go full dystopia, we're going to need an alternative system, that monetary system that works for people, that's easy to use, that's definitely not a surveillance type system, and that has sort of like a fixed supply schedule, which is why I'm talking about Monero in this one, because that's obviously not Bitcoin, right? And speaking of, you have the fungible stuff in green and the non-fungible in red. And this chart is, you see this black line over here. It's basically saying these are all of this yellow is the self-custody assets, and this stuff is stuff that you cannot, sell. Like you can't have 500 barrels of oil and take that around with you. So like commodities are not self-custody. Real estate, you can't put your land in your pocket and just go. So like all of this stuff is basically stuff that you want to be in my personal opinion, because I feel like we're heading into those uncharted waters where so crime's obviously starting to go up in a lot of places. And then the biggest, we were discussing it, the biggest, I don't want to outright use the word criminal, but like the biggest sort of mafia is the government, and they are after people's wealth, and they are after, like, what they want is to widen the income divide, between the rich and the poor. They're widening it, and that's what inflation does. So when I was at this conference, the Monerotopia conference, I asked everybody to think of two bowls of soup, and so soup one is a liquid soup with like a gravy, like a creamy soup. It's consistent, but it's thick, but it's creamy. The other soup, it has like a little bit of liquid in it. It's actually not even as creamy as the first one, but it's got a lot of chunks of vegetables and meat. Like it's got chunky stuff in it. And you have a steady stream of water that's being poured into both the cups of soup or the bowls of soup. So soup one, which is all creamy and it's liquid, it gets diluted, and then at some point it overflows. Soup two, because it has the solid pieces in it, the solid pieces remain in the bowl. So what I'm trying to say is, this is an analogy for inflation. The first soup is all cash, it's creamy and it's yummy. So it's actually it's a good soup to have, because like it's always nice to have cash. It's easily convertible. You don't ever feel the pinch. You're not like, imagine you're in gold, you're in real estate, or you're in crypto, and you're in like a lot of like some of the other stores of value that we have over here. It's painful because you might not have enough cash to satisfy your immediate demands at certain time. Like you feel like, I want to buy this dress, or I want to buy this pair of shoes, but hey, I put all my money in crypto, I put my paycheck into crypto. So like whatever it is, you don't have as much flexibility as the first bowl of soup. The first bowl of soup is just the nice one, but the second bowl of soup is actually the one that protects your value. So all of those chunky pieces of food that didn't seep out of your bowl as the water was being poured into it, that's the soup that you want to be in. So, and taking that one step further is, you don't want to be in a situation where a third party, i.e. a bank or similar, could take over your assets. So ideally, all being in stuff like this is fine, but like I would say a lot of the focus should be on stuff over here. So I know some people that do watches, like they'll just buy a watch and buy one of those limited edition expensive watches, and then wait for its price to go up. And sometimes it goes up 4 or 5 times in a couple of years. So everything fungible above non-fungible, because only the fungible stuff has ever been money, actual money. So strictly speaking of money, within crypto, Monero's the market leader in the fungible tokens or coins, and then you have gold and silver. Literally, there's nothing else. Of course, you have the newer privacy coins. Monero, I like, and Parachain, but Monero is the market leader, and I feel like that's something that going forward is going to become really important. And yeah, my slides will go into why. So coming back to that first bowl of soup, Oh, and I want to mention this. So imagine those two bowls of soup, right? All of the value, especially from the first one that leaked out and that sort of spilled out or outside. Imagine a humongous, gigantic bowl of soup that collected all of that. That's the cantillionaire effect. The Cantillon effect. So that means that your savings and my savings, especially when they're held in liquid assets like cash, um, as they keep pumping new cash into the system, those savings lose value as quickly as, let's say 9% a year, 10% a year, or whatever that CPI number they put out. But in reality, we know that that number is much higher. And in historic terms, even looking at that CPI number, I think every like 9 years or something, you lose half of your purchasing power. So think of that first bowl of soup, all of the value that bowl of soup, because now you're left with like a diluted, half watered down, shitty soup. Your bowl is half full of water, and it's only got half the soup that you actually worked so hard to put in, which is all your savings. So everything that seeped out and that you lost from your bowl got collected somewhere else, and that somewhere else is all these cantillionaires that are closest to the banking system that suck out like parasites all of that value that you and I save. So I hope that, so that's an analogy that I thought would make it simpler for me to explain inflation to all the techie guys and the IT guys that were at the conference. But cash does have its benefits. So, and it's always been king. So look at like the situation we're in right now. I personally wasn't so in favor of going into the stable coins because I had a feeling in the back of my head that they would attack some of these coins, and some of these coins would go out of circulation, and they would go to zero. So I wasn't sure it would be UST, but I also was very skeptical about USDT Tether. So I stayed out of stable coins in this period. But like think of like if you could just be in a stable coin that never goes away, even though it's losing value, like at a crash, at a market crash like the one we're in right now, it would be a really good thing to be in a cash position, right? Having liquidated and having been sort of like in a solid cash position. So cash has been king for a while, not so much lately because it's losing so much value, but some of its benefits are it's private and secure. There's no data leakage. So if I'm transacting with you, or you're selling me something, or I'm selling you something, literally just the two of us need to know what that transaction was, what I sold you, what you bought from me, how much value was exchanged, and so on. There's no third-party involvement. So again, similar, no associated costs. So like there's no cost to swipe cash, like a MasterCard or Visa. It's liquid and it's immediate access to funds. So like immediate settlement with cards and these credit systems. It takes days actually to settle the account, and no debt. It's instant settlement. So some of the advantages of having cash. I don't think I need to go into this, do I? You guys are all familiar with what fungibility is.
I am, but I'm not sure if everyone else is. But there is a question in the chat. Tristan says, "Nam, do you generally distinguish between money and currency?"
Yeah, actually. So currency is something like the US dollar. And I have a chart that's coming up that'll help explain why money and currency aren't the same thing. Let me jump into that and then we can come back to this. So exactly your question. For currency to be money, it needs to satisfy these 6 qualities of money. It needs to be durable over time, needs to be portable, so you should be able to take it with you. It should be widely accepted, so acceptability, divisibility, you should be able to, either divide it and pay exact amounts or be able to make change. It should be scarce, meaning it shouldn't be like an unlimited supply. And lately, with all the money printing and even historically, cash literally loses out on that. Like it's really bad on this. And of course, fungibility just means uniformity. So to go back on what fungibility is, think of a dollar bill that has everybody's names, addresses, phone numbers of everybody that held that dollar bill before you, printed at the back, like in a long list. Now imagine some drug dealer had it. Imagine some criminal had it or whatever. So if it was previously used on Silk Road, that particular dollar bill would sort of be a little bit tainted, right? It would lose some of its value. If it's been through acceptable channels, nothing illegal, whatever, then it's probably going to be its face value or close to it. But if it was held by, like, let's say Kobe Bryant before he died, you would probably, not even want to exchange that. Or if you did, you would probably exchange it at a higher value than its face value. Face value is 1. So that's what fungibility is. Fungibility means that every unit of the currency is equal to every other unit of the currency. Obviously, we know that that is not the case with a dollar bill or any fiat currency for that matter. So if I had to give you two $20 bills and you could select, if I had to give you one $20 bill, but I have two, one in my left pocket and the other in my right pocket, and you said, oh, I'm not going to take the one in your right pocket. I only want the one in the left pocket. Like, nobody says that, right? Because they do the exact same thing. So that means it's fungible. So again, coming back to this, because Bitcoin is not fungible, and like 99% of crypto is not fungible. They're fully traceable, which means there is a record. So any crypto that you buy, and I buy a lot of crypto, like different ones. It's not just Monero. I'm not like a maxi or anything. But if you're looking at a dystopia on a global level and saying, hey, where do I want to be in like a very, very solid place where I can store value that's also private and fungible, like that satisfies all of these qualities of money, there's not a lot of cryptos that allow you to do that. And so we come to Monero, and here's like a lot of the stuff about Monero that I don't know if people know, but it's important, So when we talk about digital money, and I think we all agree that we're going into a digital era, we're not going to go to gold and silver or any of those analog monies. We're going to go into a digital money. So what they're trying to do is now, if you saw the Fed chairman's speech the other day, he said something about a white paper. Like, why the hell would a Fed chairman talk about a white paper? Because they're trying to make, noobs and dummies think that they're talking about a cryptocurrency, whereas CBDCs will look nothing like a cryptocurrency. They'll be completely centralized. Everything that crypto shouldn't be is what CBDCs are: surveillance coins, programmable money with an expiry date, basically a surveillance nightmare with endless supply. So what we want is a cryptocurrency that satisfies all of the qualities of money. And a lot of the Bitcoin people think that Bitcoin is that currency, but it's not, because it wins on everything almost. Like, even the block sizes and all of that can be ignored, but it doesn't win on the fungibility side. Like, in my opinion, that's a killer thing that kind of kills that monetary thing. Like, yeah. Anyway, Vitalik Buterin talks about how there's a trilemma when you talk about blockchain, and that is a blockchain must be decentralized, it must be scalable, and it must be secure. So he says that a lot of these blockchains that we have today have to sacrifice, and I think Ethereum really, really sacrifices the scalability, because you can see the miners' fees or the gas fees that you have, and most of these blockchains we have today, they're sacrificing a lot of these on either of these three points. So a lot of them are not decentralized. So I would say arguably the most decentralized currency after Bitcoin, or even before, is Monero. And I'll come to why. So what we're saying here in this presentation is that in addition to decentralization, security, and scalability, you also want to be fungible and scarce. So Bitcoin gets this part. It gets this scarcity part, the 21 million and all that, but it doesn't get this one. And we'll come to why that is the case. But sorry, 1 second. So Monero, I don't know if you guys know, it runs on this protocol called RandomX. RandomX is basically, so Bitcoin basically got, in a sense, co-opted, or the mining side of Bitcoin got co-opted when, when the ASICs came in. The ASICs are the specialized, expensive computers that are made in China, and they're literally like every part of that computer is used to mine Bitcoin. You cannot do anything else on an ASIC computer except mining Bitcoin, and it's pretty expensive. So what Monero does is it runs on RandomX. RandomX is a protocol for mining Monero that is ASIC resistant. ASIC resistance is so important because what you have today is these large, gigantic, humongous mining farms, and a lot of them are, they seized all the farms in China. A lot of the miners moved to the US, and a lot of them are actually publicly traded. I saw a chart that said about 20% of Bitcoin mining is now publicly traded. And the rest of it is in these large farms that may not be publicly traded. Publicly traded meaning it's on a stock exchange like a listed company. Now imagine you're a listed company. You're a company like Red Hat. I think it trades on the Toronto Stock Exchange. Red Hat has to issue its financial reports every 6 months. It has to declare all of its, energy use and this and that. Like, it's got a lot of regulation it has to comply with. And so do all of these other Bitcoin farms that are companies that are publicly traded. And it's really easy for, and like what I'm saying is, in the future, we're heading into a scenario where they're actually going to say, oh, you're a regulated company, you can only process these transactions from these addresses. Like, these are blacklisted, you cannot process these. And so what are they going to say? They've spent millions probably buying the hardware and setting up those agreements for the electricity and all that. They're not going to say, no, I'm all about censorship resistant, fuck you, regulator. They're not going to say that. They're going to say, yes, regulator, whatever you say. And they're going to process only the transactions they're told to process. So basically, Bitcoin's going into this, like, it's literally going full speed ahead into a regulatory trap that it's not going to be able to get out of, because most of Bitcoin's mining happens in these large farms. So even if the company is not publicly traded, it's large enough, like a lot of the mining takes place in these humongous farms, where you literally have to just make a phone call or issue some sort of localized regulation. Like if it's in Texas or whatever, they bring out a law in Texas saying, hey, all the Bitcoin mining has to follow this. And there's no way they're going to be able to get out of that and say, no, we're not going to do it, because they've just spent too much to get, unless you're doing it at home and you're not traced. But let's be honest, most Bitcoin mining is not at home. It's in these large farms. So coming back to this, this is why I'm trying to explain that Monero is honestly the only truly decentralized cryptocurrency as of today. Because, people whose names you don't know, nobody knows, are mining it on regular computers that you guys are using right now to log into this podcast that we're recording, right? So that's the beauty of it. That's true decentralization, because you're looking at CPU mining just as Satoshi wanted and envisioned at that time. Security is basically saying that the network is secure, miners get enough fees to keep mining. Bitcoin's going to run into a security nightmare, because when the 21 million coins are mined, and even closer to like the next few halvings, they're going to have to, the price of Bitcoin is going to have to go up a lot more than where it is currently, to be able to give enough returns to the miners that are securing the network. Otherwise, they're just going to fall out, and it's going to be easier and easier to do a 51% attack on the blockchain. Monero solves this by having a tail emission, and June 8th was the day actually all of the Monero that had to be mined is already mined. And now we're into that phase where we're just doing a 0.6 XMR per block. So every 10 minutes you get 0.6 XMR coming out for the rewards to the miners, and that's in perpetuity. So that means you're going to have a very, 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 very low inflation, but it's enough to keep the miners going forever. So you don't ever have to worry about the miners disappearing. Scalability is something that Monero has solved with dynamic block sizes. Bitcoin doesn't have that. and that's why transaction fees are high. Monero has like a 0.1, like a point, like a 1 cent transaction fee because it has dynamic block sizes. You can scale the blocks as per the number of, the volume on the blockchain. So if it's really busy, you can do larger blocks. If it's not, then you can have smaller blocks, and it's flexible. In addition, it's fungible, means it's 100% untraceable. So it functions exactly like cash, and it's also scarce, as I will show you in a future chart. This is the stuff that I've just talked about. Yeah, this is the chart. So you can see the supply schedule of Monero here on the yellow line. It's actually lower than Bitcoin supply until the year 2040, around this time. So it's a very, like we have 18.1 million right now in circulation. It's lower than Bitcoin supply. Of course, a lot of Bitcoin's been lost over time, but what you see is a very comparable. And Monero is doing more than 10% of Bitcoin's daily transaction volume, and most of the dark nets, which is where Bitcoin was king in the past. So people used to buy drugs on the darknet with Bitcoin. That those darknets have completely switched over to Monero. And the reason they've done that is because it's untraceable, and their identities are it's critical for these guys to protect their identities. So you're talking about a currency that's very cash-like. And B, because it's just, there's no B, sorry. It's just a very cash-like currency because it's fungible. And there's been rewards out there from the IRS and others to track Monero, and no one's ever been able to do it. They're all outstanding and waiting for someone to crack. But the Monero encryption gets more and more sophisticated. So yeah, this is Monero users' spending habits. Nobody knows. Where do you mine Monero? Like, where do we go to if we want to shut it down and attack the whole thing? Nobody knows, again. And Monero is also out of most of the centralized exchanges. So there's very few exchanges that even carry it, which is why you come to this point where you say, hey, how do you even determine the price of Monero on a daily basis? Like what the price was yesterday, what it is today, what it is tomorrow. How do you even determine that when it's literally a handful of exchanges that carry it right now? And you start to wonder, well, it's doing more than 10% of Bitcoin's daily volume. It's got all of these qualities that it has solved that plague Bitcoin today. And it's traded at literally, like, just do the numbers. I don't know what the price is. I haven't checked for a few days. I've switched off, but let's just say 120 versus 20,000. We're talking at 0.006% of Bitcoin's market price. So we're talking like, for me personally, this is the most undervalued asset in the entire crypto space. And so what I was saying here is that, the future of Monero and generally the future of crypto should move into decentralized P2P exchanges, DEXs, decentralized exchanges. And these are all the benefits of using a DEX versus a centralized exchange. You hold your own keys until the point you transfer to somebody else. So if I'm transacting with X has his Monero, I have my Bitcoin, and we swap it, and then my Bitcoin goes to him, his Monero comes to me, and vice versa. So whatever it is, what you're exchanging your Monero for, but you're not on a centralized exchange. You hold your own keys. You have higher data privacy and security because you're holding your own keys. It's trustless. You don't have to trust Binance or Kraken or any other third party, which one would argue are acting more and more like a bank as days go by. It's truly censorship resistant. Nobody can stop that transaction. It's open source code, like most DEXs are open source, so they can be edited and checked for vulnerabilities by experts. And it has less vulnerability upon a hack, because if a DEX does get hacked for any reason, you still have your own crypto, like it's in your wallet in your keys. So the most utilized DEX in the world right now is Uniswap, but the DEX is actually an area that's really growing within the crypto space. So since 2020, you've got like annual growth of 858% on DEXs. And, there's DEXs coming up in the Bitcoin space, in the Monero space. There's one called Habino that's coming up. And then I was talking about how it's really important in the world we live in. And I didn't even go into the CBDCs part in this talk, but especially considering that we have a functional, apolitical, math-based, universally accepted currency with cash-like functionality to function when the world goes full 1984, which one would argue we're quickly going into.
We're in it.
We're in it, yeah. And this is it. Thank you so much. Any questions?
Thank you so much,
Good
Nam, for
time.
giving us your time. Guys, Nam is like 8 hours ahead of us, right, Nam?
Yeah.
So it's like what, midnight over there?
Yeah.
Okay, so I'm just letting you guys know if you have any questions. Let's get them up because dang, she gotta go to bed. But so
I don't have any questions. Everything was pretty straightforward.
Yeah.
Mm-hmm.
Do you distinguish between money and currency? Sorry, I couldn't read the chat before I had all of that stuff open.
oh, Smokey, what's up, buddy?
Oh yeah.
I can't hear him. Maybe he's got a
Yeah,
question.
hey, you're muted.
You're muted, buddy. I'm gonna unmute him because he's talking. Let's see.
It's like you're missing this like classic speech here.
Smokey, you're muted, buddy.
Yeah,
just
he's
in his
muted.
mode, man.
I don't hear him.
He's laser focused. He's just not going to stop.
Yeah.
I don't know. I mean, I feel like my the flow has to be like it has to improve a little bit. I tried to put in a lot of material, and then it was all over the place. But I truly feel like going into dystopia world, we need an instrument, or we need something on our side that would work for most normal people. And I consider myself a very normal person, honestly. Just very and I feel like we let's say Lebanon happens where you live or where I live, and what happened in Lebanon 6 months ago is that people who had savings in a bank today they had savings of their life savings, I don't know, like 20, 30,000, 50,000, and the next day they didn't have them. The bank said, sorry, your savings are gone. So I feel like Lebanon can be pulled anywhere, anytime. We're in very suspicious, weird, and like not good times. We're talk about living in interesting times, right?
Mm-hmm.
I wish they weren't that interesting. I honestly wish.
The only thing about it is
I did have a question about precious metals, since you did mention that we're moving into a digital economy for better or worse. What, in your view, what is going to be the utility for precious metals in such a paradigm?
Okay, so I've been listening to a lot of the precious metals gurus talk, lately, and what they're doing. Because, they've been holding down precious metals prices for so long in a hope that people just are not interested in buying gold or buying silver, that we just, forget about it because its price has been so low for so long. But the way they're devaluing everything else, look at the food, look at gas, look at anything around us. It's all going up in price. But in other words, it's not going up in price. It's your currency that you're using that's losing value every single day. Prices are changing, like restaurants. Everybody's having to change their menus regularly because prices are just spiking all the time, right? Supermarkets, so we're in painful times, not because everything's getting expensive. It's just because our money is turning more and more. The paper money we use is turning more and more into trash and toilet paper. So when that happens in a bad way, And when I say that, I'm referring sort of to hyperinflation and inflation above 50, 60, 70%. We're looking at precious metals being one of the best stores of value that you have ever dreamed of, because they've stood the test of time. Every central bank holds gold. They're accumulating like psychos right now. Every single central bank is buying gold. They may or may not be buying Bitcoin. Like I feel like individuals on their own are buying Bitcoin. Like you had the Colombian president have, or you had the Vietnamese prime minister or somebody that was on, and he had a block clock in the background. So like individuals, for sure, I'm sure they're, everyone's getting exposure to crypto because everyone's worrying about, hey, what are we going to do? What are we going to do? What about my kids? What about my grandkids? And blah, blah, blah. So everyone's worried. Everyone's looking into what they can do, and everyone's doing what they can. But like, I think in the general sense, the number one store of value that has stood the test of time is precious metals. There's no way you can go wrong with that. So when they've artificially suppressed through futures markets, they've suppressed the price of metals for so long that when the dam bursts, you definitely will see a correction to like it could be in the form of an announcement that comes from, I don't know, the Central Bank of England or something like that, and they say, look, we're buyers of gold for $5,000 a pound. It's currently 1900 or something like that, 1800 or above. So a lot of these gold gurus, and I know they're biased because their bags are full of gold, but they're predicting prices in 5 digits in the next 2-3 years. So you can never go wrong. I think, in my personal opinion, you can never go wrong with precious metals. They're fungible. They've been money for so long. The reason why it's so important for a cryptocurrency to function like cash and to be cash is because gold used to be cash for thousands of years before it gained the reputation of store of value.
Yeah, 5-figure gold price portends a 3-figure silver price at a minimum. Very decent one too.
What are your thoughts on silver, Nam?
Yeah, so silver is actually even more undervalued than gold. So silver is a good thing to hold, but the only problem with silver is it just gets so bulky to store, Like you need a very special storage if you started to go big on silver.
It's also better too, like just in case and the shit hits the fan scenario when you can't get cash out on ATM, you'd always be trading in silver coins, at least with the Amish around here you can. For like 20, whatever it's going for, 25, 32 bucks or whatever.
Yeah, 25-ish, so cheap.
The only bad thing about it is now here, if shit crashed in 1984, a lot of people would pretty much be screwed because, I mean, like, a lot of people ain't aware of, getting into gold, silver, crypto, stuff like that. Everyone just fully 100% relying on just cash. So the bank takes their money, everybody's pretty much it's going to be chaos. Yeah, complete chaos. And that's, they're doing it on the stealth. Does that, so basically you're seeing less and less ATMs around. You're seeing less and less bank branches. I know in Spain, where I used to live, there was a bank branch every second street, or every second or third store, walking down a main street. They're disappearing and being replaced by other things. And it's harder and harder to get cash out. And they've made rules about maximum cash transaction amounts for like 1,000 euros. I think earlier it used to be 3,000. So if you're a shop owner, like a small merchant, and you want to take up to 3,000 euros of cash for a good, you could. But now they brought it down to 1,000. So they're trying to keep what that tells me is that leash that they have around our necks is getting tighter and tighter. Yeah, because cash has obviously got its benefits.
You can declare the amount of sales that you want. You know, you got the flexibility. It didn't go into your books until you put it into your books, right? So, yeah, they're taking that away slowly.
Well, thank you, Nam, for your time. We really appreciate that. I'll send you the recordings of that just for everyone that's on Fractal, just a private little link. And yeah, it was very informative. I really appreciate it. Sean, I hope you're enjoying those sand dollars in Jamaica over there, buddy.
I'll try. Thanks a lot, Nam, for the presentation.
Thank you, guys. Thanks
Yes.
for listening. And shoot me any questions that you might have on Telegram if you want. If you have any afterthoughts and you have some questions, I'm happy to answer. I'm around.
And her handle's in the coaching call ad. So that's how you can reach
Yeah.
out, guys.
Yeah, no, I'd just like to personally thank you because you were one of the first people that I had looked up online when I was learning cryptocurrency in 2020, and I studied your Twitter like a student. So it's very interesting the synergies that are coming across many people. Because I was just an average person, just disillusioned, and then I finally figured out that crypto is a legitimate innovation, and here we are. So. I can't thank you enough.
Thank you so much. I actually figured out that crypto was legitimate in 2020 myself. I had no idea before that. Yeah.
How
Small
about
things
that?
can change the world. Just 10 little people getting together like this. Like, we are part of the vibration of changing it and letting people go to the free economy, which is decentralized. So, ladies and gentlemen, thanks for coming out. Appreciate it, Nam.
Thanks for having me, guys. Thank
Yeah.
you, Matt.
Thank you so
Thank you,
much.
guys.
And if people wanted your presentation.
Namaste. Yeah.
Nam, if they wanted
Thank
to
you,
stay in
thank
touch
you.
with you, if they wanted to stay in touch with you, they could. They have your website, and if they wanted a presentation, do you mind if you could send it to me and I could forward it to folks if they want it?
Actually, if you go to my website and
Mhm.
just scroll all the way down, you'll find a link to the exact same presentation.
Beautiful. Thank you so much. Bye, guys.
Yeah. Bye. Thank you.
All right, later, everyone.